And Ross, just on that market volatility, there's obviously been a lot around at the moment with the war in Ukraine and the prospect of rising interest rates. I caught up with Matthew Kidman from Centennial Asset Management a little earlier today. This is what he had to say about volatility.
I would have thought that would have caused a little bit of volatility. And when they put out their minutes yesterday, the market actually did fall. So I don't think you can attribute it to that. I think the market volatility probably is just going in waves like it normally does. It spiked in January into February with the war breaking out in the Ukraine, and it's been coming down ever since. So it's a pretty normal situation. I would have thought now that volatility measured by the VIX index in the US is getting down towards the low end of its range. So it wouldn't surprise me now that we've got more rhetoric both domestically and abroad about interest rates. Volatility might spike a bit soon, sometime soon.
Well, we'll get the March quarter inflation figures in a few weeks' time. If inflation comes in really high, do you think there's a chance the Reserve Bank could lift interest rates during the election campaign?
I don't think so. I think they've brought it as far forward as possible. It wasn't going to happen this year or next year, then there was going to be one this year. And now it looks like it's coming from August to June. I don't think they need to move that quickly. But you never know. But I think June's early enough. It will be how many after that. I think that's the kickoff date now that everyone's kind of happy with. And it's just a matter of how many. The bond market's kind of got us doing 6 or 7. The general consensus, though, is there's probably only 3 this year.
Yeah, where do you see the cash rate at the end of the year? Is it 1.5, 1.75%? Where would it sit?
At the end of the year, I don't think it'll be that high, even though the markets or the bond markets are saying it should be. As I said, I think we get one in June, maybe another one in August, maybe one on Cup Day, and that's probably it. So you're going to get 75 basis points. I think from a market point of view, it's more about the Fed in the US. Do they go 25 or 50 at their next meeting? It's not a question, which is in May, not a question of if, it's how much. If they go 50 and their rhetoric continues to dial up like it has been, I think that's where maybe you get the volatility from around the equity markets.